This is an introduction to Elliott wave trading. A majority of trends generate a typical 5-wave Elliott wave pattern. Wave 3 is a very strong rally, and it is followed by a profit-taking decline, which is called a wave 4. Once wave 4 is complete, the stock attempts a second high, or a wave 5. Once 5 waves are complete, the current trend is completed, and the stock enters a corrective phase. Now, when you look at the 5-wave pattern that is generated, and then overlay it to a chart of eBay, you can see more clearly that 5-wave pattern. We see the wave 1 begin, wave 2 pull back, and then we begin to see the increase in strength that continues in the strongest rally, which we call wave 3. Once wave 3 is completed, we begin to enter profit-taking decline, which we call wave 4. And then finally we have one more second attempt at new highs, which is called wave 5. In the following pages, I will discuss ways to identify these waves as they unfold in real time. From our research and experience, the following sections generated in orange are very hard to identify and to trade. Trading in those areas shaded in the orange, they tend to generate losses. The areas shaded in orange are generally corrective patterns where the market enters a profit-taking mode. In addition, these corrective patterns really are very hard to label in real time. Even long-term users of Elliott wave analysis will find it difficult to identify these corrective patterns. And so as a trader, we really don't want to trade and get tied up in labeling wave counts. What we want to do is we want to stay out of the market during these corrective phases. From our research and experience, the sections highlighted in green are strong rally stages, and they can be easily identified. The areas shaded in the green are usually when the market trends in one direction. And the trading in the direction of the trend generates profitable trading opportunities. Now let's focus on advanced get studies and how to find those areas that are, number one, easy to identify, and then number two, that will generate you profitable trading opportunities. The first advanced get study generates the appropriate Elliott wave count and labels them directly on the charts. The advanced get software has a built-in algorithm that automatically analyzes the market and then labels the Elliott wave counts directly on the chart. This will allow you, the user, to concentrate on your trading and not get caught up in trying to identify the wave counts. Now we introduce the get oscillator study. Statistically, at the end of wave 4, the get oscillator will pull back to zero 94% of the time. As you see on this chart of eBay, we have a wave 4 labeled. But if you look down at the corresponding 535 get oscillator, we see that it pulled back to 0. That signals the completion of a wave 4 profit-taking decline. And this was the first study that Tom developed back in 1996. It's now called the Elliot oscillator. And it identifies the end of wave 4 by pulling back at least to 0 94% of the time. It is a very powerful tool that helps users to decide when the wave 4 is completed. And now we add the profit-taking study, or the PTI, which measures the amount of profit-taking. A profit-taking index of greater than 35 indicates that there is orderly profit-taking going on, and the odds are very high for a new high. The PTI, or the profit-taking index, is a study that Tom developed that measures the amount of profit-taking during a wave 4. It is calculated by measuring the area under wave 3 and then comparing it to the area under wave 4. Historically, a PTI greater than 35 will generate high odds for a new high in a 5-wave sequence. The wave 4 channels are another tool that were developed to help you measure the trading opportunity within a wave 4. The wave 4 channel measures the time it takes during the decline. The PTI measures one area, the wave 4 measures another area. As long as the price holds above the blue, the green, or the red channels, the odds will increase that this sequence in progress will lead to a wave 5. And the last study that we add to this is called the ellipse study. The ellipse study provides both price and time support for the end of a wave 4 decline. The prices holding on the ellipse study provides further confirmation for the end of wave 4. When you combine all the technical analysis in place, the trade is taken on the crossing of the trend channels, as one example. In Elliott wave, this study, this trading strategy, is called the Elliott wave type 1 buy. We held the wave 4 channels. We have a PTI greater than 35. We have the ellipse study come into time and price right at the end of wave 4. We have an oscillator that pulls back to 0. And we have a crossing of the regression trend channel. We buy the 5th wave. One more study that you might want to look into is called the XTL study. Advanced Get can identify what we call an XTL buy and an XTL continuation. XTL buy is when the XTL turns blue and stays blue. The XTL continuation is when it stays blue, when it stays blue. When you combine that with your type 1 buy, it is one further technique that Advanced Get users can use to help identify the areas of an Elliott wave pattern that generate profitable trading opportunities. It's advanced get helps the user identify these areas. These are 3 other stocks. This is eBay. This is Mercury Interactive. XTL buy, XTL continuation. See how this is blue this whole time? Wave 4 profit-taking decline. The ellipse study comes into place, triggered by a breakout of the 6-4 DMAs and a 5th wave high, pulled back to 0. Same with the software holders with this other chart. 3, 4, 5. Before we end this, we just want to show you that this 5-wave sequence does not work just on rallies, but it also can work on declines. And here is an example where we use a down market or an attempt to sell short. You have an XTL red turning, and then you have an XTL continuation sell. You have a wave 4 rally, crossing of 0 on the oscillator. You have the ellipse study triggered, and then a 5th wave decline into a mob, which we will discuss at another time. We thank you for your time, and we hope that you enjoyed this simple lesson. We look forward to showing you more in the future.